The Vanguard Total World Stock ETF is designed to let you own all the world's stocks in just one fund. But is it the best option to bring them all and in your portfolio bind them? Let's take a closer look.
It's quite cool.
VT has a staggering 8,000 holdings, a low expense ratio of 0.09, and over $12 billion in total assets. Over half the fund is comprised of American stocks, but every other developed and emerging market is also represented. The fund is weighted by market cap, so American giants like Apple, Microsoft, and Amazon dominate the list of top holdings. The Swiss Nestle and Chinese Tencent and Alibaba are the only international stocks to crack the top 25. VT is extremely good at what it is, a completely passive investment in the collective success of the world's publicly traded companies. It will never be on the list of top performers in the short term, because you'll always get the bad stocks along with the good. But with its low expense ratio and vast number of holdings, it has a long-term advantage over many other ETFs. It's also perfect for investors who just want to be able to buy an ETF, put it in their account, and not look at it for 10 years. VT is certainly a solid choice for passive investors, but it may not be the best choice, because dividing your investments between different ETFs could yield better results and offer more flexibility. As an example, let's look at both VTI and VXUS. These two Vanguard ETFs are essentially VT split in two. VTI tracks the entire American stock market, while VXUS covers all the international markets. Looking at expense ratios, we see that VXUS has the same expense ratio as VT, 0.09. However, VTI's is much lower at 0.03. So, if you split your investment between VTI and VXUS, you'll still end up owning the world, but you'll own it for a little bit cheaper. Splitting up your investments between different financial companies can also be a good idea. Vanguard is a great company that has great funds, but there are many other good companies out there that also issue ETFs, such as iShares, Schwab, and JP Morgan. Owning multiple ETFs also allows you to take advantage of tax loss harvesting, and if you absolutely need to sell some stock to raise capital, it gives you a bit more control in deciding what to sell. You can also tailor the risk level of your portfolio by owning more or fewer small cap or emerging market stocks. So VT isn't the cheapest or most flexible way to own the world, and it doesn't quite qualify as the one ETF to rule them all. But its low expense ratio and vast number of holdings make it a solid choice for the truly passive investor that has a decades-long time horizon and just wants to set it and forget it.
Precious.